Hi everyone. Palo Alto Networks reported fiscal year 2023 second quarter results after the markets closed yesterday. The stock is up double digits today. The market really liked what Palo Alto Networks had to say. So let's get a look at the big picture results from Palo Alto Networks stock. So Palo Alto Networks, the big thing was that it turns GAAP net income profitable and forecasting that it will be GAAP net income profitable for all of 2023. And of course, if you've been following my channel for the last few months, you know that Palo Alto Networks is one of my top 23 stocks to buy for 2023. I made this recommendation in January. The stock is up nearly 40% already in 2023. So I hope you followed along, and I hope I've helped you make some money on this stock. In its most recent quarter here, revenue increased by 26% to 1.66 billion. Earnings per share of 25 cents was a significant improvement from a loss per share of 32 cents in the same quarter the prior year. And this is what I've seen from Palo Alto Networks over the last several quarters is a steady increasing in terms of getting closer to profitability and making room in making progress in economies and scale. Total billings of 2.03 billion was up 26% year over year. RPO, which stands for remaining performance obligations, of 8.8 billion was up 39% year over year. That means the company has orders already of 8.8 billion dollars that it just needs to perform on. It's already locked in these contracts, and these remaining performance obligations are only increasing. And that's great news for investors because you've got this nice backlog of orders to fulfill. And so the company is GAAP net profitable for the trailing 12 months. That's impressive. And it increased its billing guidance for 2023 to 9.15 billion. That was up from its previous outlook of 9.03 billion. So it's making progress, achieving profitability, and growth is better than expected, right? So that's what you want to see from a growth stock. You want to see growth, and you want to see that growth making progress towards profitability. Now, if you follow my channel, you know I follow a lot of growth stocks that are not making progress in profitability. They're just growing for growth's sake. They're just having this strategy of let's just grow regardless of how much it costs us. Let's just grow at all costs. And that's not really what's in favor in the market right now. While those kind of stocks may do well during speculative furies like we experienced in late 2020, early 2021, those kinds of stocks can do well, right? When investors are just chasing the high growth and unprofitable growth stocks. But in normal times, like we're experiencing right now, where interest rates are becoming normalized, the cost of capital is increasing, investors are less willing to invest in these unprofitable growth stocks where you don't expect to see any return of cash flow for maybe 5, 10, 15 years into the future, if ever. And so this is where the focus is now, and this is where I have been arguing where investors should be focused on is profitable growth stocks or stocks that are showing progress towards profitability, not just growing at all costs. And Palo Alto Networks is transforming cybersecurity with AI. Artificial intelligence is an incredibly popular buzzword right now. It's not surprising that Palo Alto Networks will want to capitalize on the popularity of artificial intelligence to highlight that it does use AI to help prevent some cybersecurity attacks. The company's forecasting Q3 net revenue of 1.7 billion and Q4 revenue of 1.95 billion. For all of 2023, the company's forecasting positive GAAP net income in each quarter. So it's going to be profitable in each quarter. That's what it's forecasting for 2023. So overall, great news. A great quarter. I'm not surprised that the stock was up double digits following these results. It was just a hit on every target and on every metric. So it is one of my 2023 best stocks to buy. It has gone up considerably already, and I'm not changing the recommendation yet, because I feel that the increases so far have been justified. So I would still recommend this stock as a buy because it's just performing so well that it's earning the increase in valuation, right? It's turning profitable, it's making progress, it's earned the better valuation. All right, so that's all I've got for this video. As always, I'm truly grateful for your viewership. Thank you for watching, and I hope you'll tune in next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.